Good morning and kind of happy Monday. I hope you got your seatbelt fastened and are buckled up a little bit because what a ride it's been this morning. We've seen trading that literally triggered a rarely used halting of trading for 15 minutes as the major stock indices just tanked this morning. Partially due probably to some of the fears about the global economy, partially due to the oil crisis right now and the impending oil price war that's going on. Oil prices tanking 30% this morning. You see this kind of 5% drop here in the S&P 500 today actually retraces gains clear back to the middle of March in 2019. Now, again, I'm not going to spend a lot of time on this. I hope that you plan for this. If you're a Clearbrook Investment Management client, we have been planning for this. We've made adjustments to the portfolios over a year ago. So if you have questions, be sure and call us. My name is Matt Atkins. I'm the Senior Financial Advisor with Clearbrook Investment Management and also a National Social Security Advisor certificate holder. Now, as I mentioned briefly last week, I just want to remind you, our encouragement is when you think about your future is to plan for short-term, mid-term, and long-term expenses. What are you going to need from your portfolio for the short-term, mid-term, and long-term? The short-term, 1 to 5 years, that should probably be cash or cash equivalents, CDs, bank deposits, money market funds, maybe a fixed annuity stuck in there, something that provides guarantees, no losses. You do not want to be pulling money out of your account when the market is tanking like this. Why? Because if you have a bunch of stock holdings and the market's down like this and you need your monthly nut covered from that, then you're going to have to sell a lot of shares in order to cover what you just needed last month. So not a good time to be selling shares in order to live on that money. Midterm, that has to do with kind of your 6 to 15 year range. That might be a mix of stocks and bonds, a little bit of equities for some potential growth, possibly an indexed annuity in there, something that can kind of have some growth possibility, but also be protected. Again, you want this money that you're going to need in 6 to 15 years to have some opportunity for growth, but you don't want to put a ton of it at risk at the same time. And then where your real risk happens is out here in the 16 to 30 year money. And if you happen to be a young person and you've got your money all invested in stocks, and you see what's going on in the markets today, don't worry about it. You've got time to recover. Stick with your plan. But if you're somebody who's heading into retirement and you want to make sure you have money for the future, then only out here is where you have your major kind of stock holdings in that bucket. Because again, you're going to have time to recover if they're out there. I want to kind of encourage you to do something as you think about your planning, and that's to give yourself a big hug. I kind of stole this acronym from a document I read this week by the Alliance for Lifetime Income. They use the acronym MUG, but I like the word hug better because the truth is, if you can see your planning out there and prepare for these major expenses, when you look into your retirement years, you will literally be giving yourself an emotional hug. You'll be reducing your stress as you head into your future. Those three major expenses that everybody faces have to do with housing, utilities, and groceries. Now, housing might be a mortgage. It might just be the fact that your land taxes have gone up. It might be that you have a rent to pay. Whatever your housing looks like, it's going to be one of the continued expenses for most of us, even as we head into our retirement years. Utilities, obviously another major expense. For some of you, that's air conditioning. For some of you, that's heating, depending on where you live. But those utilities expenses will continue and again, probably not go down. Groceries is a third one that many people see as being one of their major expenses as they go into their retirement years. So here's an encouragement. If you think about your bucket planning, think also about creating a steady income stream, whether Social Security, pension, or an income annuity, something that can create a steady income stream for you as you head into those years, and you will literally be giving yourself a hug. You'll be covering that nut, housing, utilities, and groceries. Just one more thing before we go. I want to remind you that this is the last couple days to register for the upcoming Social Security Answers workshop here in Bellingham, Washington. If you live close by, I encourage you to come. It's going to be at the Jalapenos Event Room in Barclay Village, March the 12th, 6:30 p.m. I'd love to have you come. You can register right here at socialsecurity-answers.com. Again, just a few days, and I want to see you there. I hope you'll join us. We're going to talk more about giving yourself a hug next week. Hope you have a great week, and let's hold on and see what happens.